get some news on the markets and the week ahead. Ted Weisberg is with us, founder, president, Seaport Securities. Look, we have CPI, PPI, bank earnings. Are you ready?
Always ready.
Born ready. I know you are.
Ready.
How are you feeling about the market?
Well, I think the market is acting quite well. The breadth is improving. Some of the high-profile tech names are sort of rolling over a little bit, which is not unexpected. But the good news about the market is that the breadth is improving. A rising tide is floating a few more ships than it was 2 or 3 months ago. And it probably speaks well for the small caps and the mid cap sector, which for the most part have been lagging.
So it's interesting, like today, for example, I just saw NVIDIA at 875, right? And I'm so used to it now in the $900 range, and you see the price target of $1,200 today. I think that was from KeyBank, but Loop Capital put $1,200 out maybe a month ago. So, you know, everybody and their mother is saying over $1,000 on NVIDIA. Is that the kind of thing you would jump in on today when you see it at 875? Would you consider that the pullback?
Well, I don't own the stock. We have clients that own the stock personally. Right. I don't really have any interest in buying the stock at current levels. You know, it's it doesn't mean that it can't be bought here and make some money, but I would say, you know, at $800 or $900 a share as opposed to $300 or $400, or as opposed to $50 a share, you know, it's an entirely different game, and it's not a game that necessarily we play at Seaport or our clients play. And
you brought some great picks today, and some of your picks have been doing so well over time, and we'll talk about that. What matters to you this week? Obviously, the inflation prints and those bank earnings. Can you give me some thoughts there?
Well, I think the Fed and the interest rate picture is particularly interesting because the entire Wall Street community loves to pontificate about what they think interest rates are going to do and what they think the Fed is going to do. As far as I'm concerned, it's a lot of wasted rhetoric. On the other hand, these people get paid a lot of money to make these comments, but the fact is that they don't really know, and the Fed doesn't really know. And as long as the U.S. government keeps spending money like a drunken sailor, they are at opposite ends of the spectrum of what the Fed is trying to do. I think as far as interest rates, they'll do whatever they're going to do when they do it. I think there's a good possibility. And the fact is, rates won't get cut at all, except for the fact that we're in an election year and the Fed is political, and the Fed might do whatever they can, you know, to help the current administration. But that aside, you know, I think there's also risk that rates will actually go up, because if the economy does not soften, if corporate earnings do not soften, if the employment numbers do not soften, what is the rationale for lowering rates? There really is none.
Listen, Jamie Dimon has said in a letter to shareholders this morning that, look, 8% rates could lie ahead. That's what he's saying, basically, right? I mean, warning folks, don't get ready for some big pullback in rates.
Yeah, I think this whole the rate rhetoric, which started actually last October and was very good for a nice rally in November and December of last year, is nothing more than rhetoric. I mean, I'm not quite sure why we pay so much attention to it. The fact is, rates where they are today in my world, and I've been doing this a lot longer than you have, Nicole, and probably a lot longer than many of your viewers, you know, rates are kind of normal right here. I mean, I don't consider this an aberration. And the flip side is, if in fact the Fed lowers rates, if they're going to lower them because the economy is getting soft, then the stock market has bigger problems than we think. So I don't think
that's how people are viewing it. You know, I want to get to your picks, and I don't mean to interrupt you, but you know, it was your talk about the fiscal spending that reminded me of Jamie Dimon's. You know, I get up at 5 in the morning, and stuff goes in my brain and comes back out. And when you mentioned the fiscal spending, I remember that's really what he was worried about. I mean, he actually said huge fiscal spending, the trillions needed each year for green economy, and so on and so forth. Let's get to some of the picks. Some of the names that you've liked for a long time. Meta, Luxottica. No, not boring. I mean, first of all, Zuckerberg's doing great, right, on the billionaires list. Tell me about those names that we often hear from you. Meta, Luxottica, and Chubb, right? That's another one you often have.
Well, yeah, we kind of play in different sandboxes that are not necessarily popular, but certainly Meta is in the right sandbox in terms of big cap techs. I think the Meta story is very much intact. Obviously, we own the stock, and as we've spoken in the past, we've owned it since it was under $30. We haven't sold a share, and when we get new money, in fact, if the price is right, we will add Meta to portfolios. I think Meta continues to be a very positive story, and there's a few other high-name tech stocks that we don't own. Amazon also is terrific. Google is a relatively cheap stock. But away from that, we tend to be a little more conservative.
Yeah.
We like the insurance stocks.
Oracle you have on there?
Yeah, well, we added Oracle. Oracle's a new name.
Really?
Yeah, because Oracle is kind of they're in the middle of a lot of what's going on in the whole AI world. And I think, though the stock has done well over the last 3 or 4 years, I think it's sort of kind of in the closet a little bit, if you will. And I think Oracle's better days lie ahead of it. But we like the insurance sector, which is nothing unique. I mean, Warren Buffett, he built a huge empire on insurance stocks.
Right, and also energy you have. You had Exxon and Occidental Petroleum.
And ExxonMobil and Oxy, which is also a Berkshire stock, and the Schlumberger. We talked about EssilorLuxottica, which is kind of a specialty kind of stock, which is eyeglasses and lenses and retail stores. It's a very, very interesting company, a French company. The problem with Essilor is we own the ADRs, and the ADRs trade very lightly. So if in fact you look at a stock like that, you have to be sort of careful how you buy it and when you buy it, because it's so thin.
But it certainly has run up. I mean, it went from $66 up to $115. This is a name that you've liked for a long time.
Right, yes.
1 year, it's up about 25%. Yeah. Ted, it's great to see you. Always. Thank you. And I know you watch those banks really closely. Any thoughts on the banks? Do you like the banks overall?
Well, we own the banks. We've owned the banks since
1979.
Since you and I first met. But of the banks, the one we seem like the best is actually, J.P. Morgan is probably the best.
Yeah.
But we like Bank of America. People forget that Bank of America bought Merrill Lynch. Bank of America is a terrific company. Yeah,
aren't we supposed to say Bank of America, Merrill Lynch? Did they drop the Merrill Lynch pot a long time ago?
I don't think they talk about Merrill Lynch anymore.
All right. Thank you. Ted Weisberg, Seaport Securities. Great to see you. Teddy, glad you were here with us.